All right, let's go ahead and get started. So we had a member here who wanted to ask about Apple and what they were seeing, and what made us get in, even when the market was kind of pulling back. And really, it gives me an opportunity to be able to share with you. Just basically how we trade this methodology. I think it's really important. I'll try to keep it short, to the point. Okay, and a lot of you have heard this stuff before, but I think that it's very, very important that we reiterate it because I could still see that there is these times after a big pullback that a lot of traders get stuck in a rut. And what I mean by that is that they uh, constantly look for the short side. Because I get it. You're like in this dark hole, the end of the world. If you listen to news, if you listen to friends, things start to look really grim, and you start doing things that you weren't typically doing. So anytime we get like that smaller pullback, you feel like, hey, this is the end, right? But you got to understand that on a bigger time frame, basically what you're doing is just kind of basing at what we would consider a support level. All right. And we'll go over that here in a second. All right. So here's Apple. Okay. And I am currently on a monthly chart. All right. And so I have to work my way from the big picture into the smaller picture. Okay. Let's go ahead and do that. I'm going to go ahead and actually, do I want to erase these? I believe I can remove drawings. Maybe I can come over here. Can somebody tell me, isn't there an area where I could just hide the drawings? I'm pretty sure there is. Nah, it's okay. All right, so the monthly on Apple is consistently supported at the cloud. That's the first thing I would tell you. This is the 9 EMA cloud. There's some other EMAs in here as well. But what we do notice is that every time Apple comes back into the 9 EMA, it is a great time to buy. Okay. Notice that during this last push, what I was watching, this is the month of December up here. Okay. November, October. As soon as price on the monthly candle started to go inside and up, and we teach that here at Trendy Trading, guys. As soon as we started to move inside and up, which was around 149.95 or 150, okay, this is where you start to think that we are projecting demand or support. Does that make sense? So we're creating a support level here. And the reason why I say it's support is because if you go back to previous inside and ups, price, when it moves up and comes back down, it's supported there. Okay? So right here, let me go ahead and draw a box for you just to show you on a bigger picture. It's going to be right around this area. Okay? Somewhere in there. This is where I'm looking for support. Now, Trendy Trading also teaches you from this previous pivot, once it hits a certain level to the upside of this pivot, okay, it breaks out 95% of the time. Roughly, folks, that is at or around 156. Okay? Roughly, that's around 156. So I knew that once we put over that level, we were looking at a 95% probability that we would get a push up. Okay? So that's just from a monthly perspective of looking at that. Okay, the next thing is when I'm teaching you fibs, understanding where you place your fib. Again, you can watch the video, but to make it very quick and easy, this is the beginning of this trend. Okay, so I'm going to place these fibs roughly about right here to this pivot high. So I'm going to come up right in here where price is stalled, just like that. Okay. And then we could see that price was holding this 38.2. I also teach you that here. This is your bullish channel. As long as price can hold in here, we're looking for the breakout. Plain and simple. All right, no news, no nothing. Just kind of keep it there, and that's what we're looking for. All right. Now let's go ahead and go into a smaller time frame and look at the weekly. All right, so if we just come into this cloud for the weekly, you can see that when price dips here, we tend to move out, but timing is the variable. Timing is the variable. We have no idea how long price is going to stay in this cloud, right? Or we can go back. We can also like count, right? All of us can count and we're like, well, every time it comes in here, you can see here, it was in there for about a week and a half. It was in there about a week and a half. Right here, 1, 2, 3, 4, 5, 6 weeks before it pushed up. Right here, 1, 2, 3, 4, 5 weeks before it pushed up. 1, 2, 3, 4, 5.5 before it pushed up. So what you can gather just from looking at this is that around 5 to 6 weeks is max time for Apple to stay inside of this cloud. Okay? So again, as long as 5 or 6 weeks is holding in here, you start to get interested. I'm not saying you take a trade just because that it's in there for 5 to 6 weeks, but you should be thinking, looking at pattern recognition and saying to yourself, things are starting to get interesting here, right? Plus, you're listening to the overall broad market analysis. And if I'm like, hey guys, we're looking for this, we're looking for these, the broader market to sustain its bullish rally and so forth, you got to put all that into consideration. Okay. So, first of all, the monthly, I showed you just really quick how the monthly cloud is always holding. Then I showed you once we reach that certain point, and again, I could teach you that in here, that we have a 95% probability of a breakout. Then we move into the weekly chart and we go, okay, we're getting a little bit of vibe here. Okay. And then we're going to move ourselves into a daily. All right. So here's your daily chart. Same thing, folks. Notice how the trade is easier when price is above the cloud. When price is below the cloud, it's not easy. So for any of you that are trying to trade on a shorter time frame, then really right away I would be thinking, hey, if price is not above this cloud, I really don't even want to scalp it to the upside. If it's below the cloud, sure, then you're thinking maybe I want to scalp to the downside. Okay. All right, then we come into one of my favorites, which is the 4-hour cloud. Okay. Now I want you to notice something, and I'll show you this really quick. How I came up with this blueprint was really quite easy. Putting all that together, I understand that Apple is very bullish. But all I'm doing is identifying the inside and up formation. I'm looking at the overall market, which is bullish, after it found support, and then I'm looking to take a trade in Apple. Okay? That's if you're coming into this week. Now, the reasons that we put on a longer term trade is because of edges, because of what I showed you on the monthly, and because of what I showed you on the weekly. Remember, you can't be looking at a 4-hour chart and thinking, hey, I think this is great for the next 6 months. No, we look at the 4-hour chart after we have assessed that everything looks great to take. Then we use the 4-hour and the scripts that we have here, or your methodology of support and resistance, and we trade off of that. So once we get the big picture, does that make sense? All right. So now let's go ahead and come over here. We're going to go ahead and turn on the trendy edges. Okay. And for these purposes, what I'm going to do real quick is take off the cloud. Okay. Just to kind of clean it up a little bit. All right. So we're going to take the cloud off. That's what it looks like. And then we're going to come in here with the trendy edges. Okay. And then we're going to come back here to a weekly. Just like that. And then I'm going to go ahead and open this, and let's look at, we want to show past edges as well. And we sold that AMAP perfect, didn't we? I think we did. All right. So what this is going to show is all the past edges. Really, this is how you study them at the end of the day. This is how I study them, is by going back and looking. Okay. All right, so this is Apple. All right, and if you're wanting to take a longer term trade, long-term trade, 6 months plus, we're looking at these blue levels here. All right, and we trade them just like we do intraday. We wait for reclaims. All right, so once price reclaims, we would take the long for several months. Okay, over here, what I'm looking for, notice that we have support. All right. And I'm trying to remember, folks, if somebody could tell me if you want, you don't have to, but when we first initiated the trade, we were supported by the lower edge. Does that make sense? So remember, when price comes down into a lower edge, we look for a reclaim and then we take the trade to the upside. Okay? So this is one big reason for me that I'm looking to take this trade for a long period of time. So for anybody that's coming in here new, you wouldn't understand that. You'd be like, well, I don't really have anything to trade off of, right? You look for mentors and people on Twitter and news events and squawk options or whatever it's called. Those kind of things you're looking for to see if they kind of help you feel convicted in a trade, right? What I'm simply looking at is I honestly do not look at anything except for the methodology that's right here on the screen. All right. So the first thing that I say to myself is we're going inside here on this candle. The next thing I look at is we reclaimed this level. See, guys, to make it very simple, prices like to move from support into resistance. Okay? The issue with most traders is that they're trying to take trades immediately at support. And what happens is you got a lot of traders who go way too big. Okay. They go way too big and they get stopped out very quickly. And then they watch their trade take off and then they're really irritated. And by the time they take it again, unfortunately, they've kind of bought into FOMO. And then all of a sudden it pulls back and they're mad again and they lose again. But really what's happening is the stock is just cooling off. Kind of like right now in the market on the ES futures. See, we start to pull back a little bit and everybody wants to rush to the downside. I'm not saying that's a bad idea. It's a great scalp idea. The bigger picture for me right now is that we're building support, right? So I want you to always study how things move out of support. They're not easy. You have to take into consideration these lower wicks, right? So this trade right here on the weekly started to push over that level. You see that? But it came back. So like an advanced trader would understand this. New traders, they look at stuff like this and it's really easy for them to just think trading's easy. But as I always say here in the room, you guys do not understand that these wicks here are people's accounts dying. Like seriously. They try to take trades, they try to FOMO stuff, they try to short stuff. They don't have any sort of methodology. And when I see wicks, I think, man, people are getting stopped out all over the place. Okay? It's very rare that you don't see wicks. See how this is not very wicky, right? This is like a really straightforward type of week in Apple. Okay? All right. So we get the reclaim, we take our trade, and you can see here we open up our new edges. All of a sudden, our edge is resistance like it's supposed to be. Upper edges are resistance or supply. Lower edges are support. We're taking the trade. Once again, folks, we have an inside and up here. And right here, absolutely beautiful on the week. Okay? This is an inside and up. That's all I need to tell you. Inside and up, guys. Right? How many times can you hear me say that? They work so often that it's hard to ignore. Okay? And right there, I just give you an illustration in the room. That's how you need to read this. Okay? Inside and up, and then followed by, once again, another inside and up. So when you're looking at this, what would be something you would be paying attention to? You're paying attention to, let's go ahead and put the cloud back on here. You're paying attention to this inside candle, and it does not go inside and up until we get over. See this resistance level? Do you guys see what I did there? I placed the yellow line on the top of the base candle because this is an inside candle, but it's an inside and up when price goes over this. Once we break over that, fireworks. Inside and up, here we come. And then how do you find the upper targets? Well, that's in the video showing you how to do Fibonacci extensions, which we won't go into right now. Listen, the whole entire market works on supply and demand. Okay, period. What is there in the way is news. It's different methodologies, not saying that they're wrong or that they're bad, but they can gear you in the wrong direction. Okay. And to me, that's kind of what they're there for. If we didn't have news, like we were saying yesterday, if we didn't have news, the market would just keep going up. It would always go up. We would just buy, right? Think about it. Everybody's super bullish, always. So we got to have something in place, a catalyst that drives prices to our lower levels. Okay. Let's go over here and look at the ES really quick. The problem, another thing that I like to say that I think is really important, most new traders that come in trendy trading, and it takes a long time to understand this, is their patience. It's horrible. Absolutely horrible. Most likely you come from a room that's used to like taking quick scalps and you're looking for really quick money, okay? But the truth of the matter is, like, that only works for so long. And then you're just going to get chopped up because you don't really understand the bigger picture or understand that most people are going short into demand and most people are going long into supply. And we just have levels on our charts that help you understand this. Let me go ahead and show you once again before we complete this what I'm talking about. And again, I can't make this up, folks. You all know that the levels are here before price gets there. And that's one thing that's different than anybody else's scripts out there. Most scripts are moving, right? They're flowing and they're kind of moving with price and yada yada. Ours are stationary and they are there way in advance. You have lines that are there a year before. We have lines that are there a week before, a month before, and even a day before. So that way we corner the market for all traders. Do you want to trade on a 1 day time frame? Do you want to trade monthly? What is your Kool-Aid? Which one do you want to drink? All right. Now this one I want to show you. This is a weekly edge, folks. And once again, I can't make this up. Price came into the edge, price pushed up. This is supposed to be support. Price pulls, okay, just a little bit, goes up. Guess what? It's at what we call the decelerator. Follow this across. Once again, way in advance. 1 week before to be exact. Price pushes up. It finds resistance. All lines on my chart, resistance are to the upside, support at the bottom. Each one of these gives you a trading opportunity, right? You just got to listen to the methodology. Price comes down, it finds support. Why is this support? Because price was up here and the trendy level is here. Wait for the flush, go long on the reclaim, boom, you're a winner again. Okay? Notice today, price pushed up. Where did it back off at? Okay? Where did it go back? Anybody see that? You guys can all see that, right? So if you don't have the scripts and you're like, man, well, my target was pretty close, right? So my target was good. But notice that what was even better was the trendy edge. Okay. So price pushed up into the trendy edge and found resistance. Okay. Now notice that price actually came back to the PMZ, which is right here, guys. Right back to the PMZ. All right. I don't want to go through all the scripts right now, but the PMZ is absolutely valuable, the pre-market zone. Notice the price was supported there. And what we find many times is that price, when it pulls back into the zone here on a bullish day, we find support. All right. Sorry, I'm getting comfortable here. I have to get some water. Start talking too much. All right. So what's going on here now? We got a 5-minute. We're in a cloud, right? And this right here, this entry and stop, I was showing you guys how to trade the trendy levels. So like coming over here, I think I was looking at a 3-minute. Yeah, 3-minute. So over here, you go long on the arrow. I went ahead and showed you how you set that up. And you could see from that, you know, you're able to pull 46.35 into 46.47. But the bigger trade was down here this morning when you guys take this out of the entry box. Okay, right there. Gosh, man, I'm just telling you, absolutely stunning results here. All right. So my future traders, if you're taking the blueprints, they're working out for you, speak up. Spread the joy. All right. It's enough money to be made here to take care of a lot of stuff. And I hope it's helping you. All right. So again, right here, we got to get above the cloud. If we can get back above the cloud, you're looking for a move back into 46.46. Okay. All right, so let's see, little Bumble Bear, Trendy, can you please go over the 95% breakout thing again? Well, because I'll be putting this out on social media, I don't want to put too much of my, those probabilities out there. But basically, what I'm saying is we have levels that I'll be sharing with you, okay? That when you have a high, when price wraps back around, and gets within a certain percentage of that high, you have a 95% probability of a breakout. I've been doing this for plenty of years, and I could tell you that it works a lot. Matter of fact, it doesn't work about 5% of the time. Okay. Now, the issue is how far that breakout is. That's one thing that a lot of traders like, you say breakout. I'm saying a breakout from the high. So let's just hypothetically say that the high is 3,000. You hit that level, and I say, hey guys, we have a 95% probability of a breakout. Well, what happens is that we may only go to 3,005. We don't know that, right? So that would be okay. 95% probability we got that breakout. Now, I do teach you with Fibonacci extensions how to calculate where that breakout's going, and those are very accurate as well. Okay. All right, so some really good trades this morning. I think I'm still in, let's see. Let's go over here and take a look. Let's see. No, we did very well on AFRM. Let's go ahead and show you that. Okay. And so this is absolutely perfect as well. Look at this. I mean, we sold at the top. We sold 4 times all the way up. We took this trade very early on. Matter of fact, I'm pretty sure that I took this from a buy signal from the trendy indicators. Let me go ahead and just double check that for you guys so that I can confirm. So give me 1 second. I'm going to have to go into, I have a channel that you guys can't see where I send my my auto alerts into, and then I'm able to trade very quickly. And let's go. I think it started this morning. I could be wrong. Give me 1 second while I look this up. No, was it AFRM or AMAT? I apologize. It was AFRM. Yeah, it was AFRM. Sorry about that. So AFRM. And let's see. Today, 9 o'clock. Give me 1 second. I'm almost there. It looks like, if I'm not mistaken, we could see it right here. So I'm just checking my alerts really quick. So AFRM, it looks like it came through at right around this time. Yeah, and this is where we took the trade. Yeah. So we took this trade just basically off of a buy signal, and then we were able to trade. I aimed in dollar increments all the way up. Okay. And then what you want to do, let me just show you guys really quick what that looks like. So I get my buy signal, which is going to be right here. We go long. Okay. Price pushes up. We start trimming. So let's just say we trim there. You can see that at the trendy level there. It pulls back a little bit, then pushes again. We trim there into another trendy level. We get another buy signal. You start trimming up here. And then, so we trim 4 times. And then what we're doing is we're bringing the stop to entry or where you're comfortable. I ended up putting it right below the PMZ. All right. And it came below the PMZ and kind of stopped me out there. And there's the PMZ. All right, so we traded. So this is very important. We traded from the trendy edge. Look at that support. Again, I can't make this up. Price pushes up into the trendy edge, rejects, breaks through on an inside and up, and then boom, there we go. Now I did want this 133.38, but you can't be sitting there super greedy. You got to bring your stops up. you gotta play the part, guys. You gotta understand that I do not trade off of hopium. I'm here to, when things are moving my way, we want to be taking profits. It's not an easy market. If we go back to this morning's open and we talk about, what I was expecting, I said, look, we bought the gap up perfectly, but we're still underneath the cloud. And really, at the end of the day, that's what it's all about. Okay, and you can see that over here. Let me just go ahead and show you on the SPY, Qs, DIA, and IWM. Nothing's changed here. The only thing that actually looks good are the Qs. They're back above the cloud on a 4 hour, but your SPY in the cloud, your DIA in the cloud, your IWM in the cloud. All three of those are still subject to going lower until we can start to close under those and then make higher highs. Okay.